Hi everyone, and welcome back to another Brooks Price Action Weekend Market Update. My name's Tim Fairweather, and today I'll be covering the DAX 40 futures. Let's look at the yearly chart. On this chart, every bar is 12 months. You can see we're in a tight bull channel. We've had very few pullback years, one here, only 4 pullback years that were bear bars. Everything else has been a pullback in a very strong bull trend. If we were to take last year's bar and project it up the close of last year's 786, we're about at 1 times the yearly bar. So everyone that bought close of that bar, putting a stop down below, is at 1 to 1. And that might be the target for the year, but we've still got the rest of this month to go. If we drop down to the monthly chart now, you can see a similar pattern. We've got a tight bull channel. I thought this might be some kind of final flag, leg 1, leg 2, 2 legs sideways, and that this could be leg 3. Now it might still be leg 3. We've got a small pullback bull trend shape to it. Traders see that this pullback was deep, but you can see even though on the monthly chart there was a bear bar, not only did it have a tail below, but there were way more traders buying below it. So we're at a channel, we're in a channel on a lower time frame, and we're at that yearly 1-to-1 target. So one possibility is we go sideways around here. We're also only 300 points or so from 20,000. And if Santa's going to bring a Santa rally, well, then that would be a target. Although this is a good bar to buy below on the monthly chart, we tested it twice, and now I've got a new leg up. Currently, we've got a gap, at least with the bodies between these months. You can see now there's an open body gap. And although that is bullish, I think traders will be mindful that there are a lot of tails here. And that means two-sided trading. And if we zoom down, which we will onto the weekly chart, we're going to see a lot of overlap. This monthly bar was very big. And I said, because it was so big, I think it has a better chance of getting half R. So if you buy the close, put a stop all the way down here, I think traders will take half that bar range. That's one possibility, which would bring us up to 19,900 on the cash index. Using an actual risk perspective, if a trader bought the close of that bar, and this was the risk that they suffered, their 1-to-1 target is up here, which is 19,728. Which is about where we are. If I'm a bear looking at this chart, it's great that the bulls were not able to close above that bar. We know there are sellers above bars here. We know that there are sellers above bars here as well. Traders were willing to buy below. And I think we're going to continue this behavior. And I wouldn't be surprised if there's more sellers up here, betting that they're going to come back down into this open gap. But also their risk reward's very good. Their risk is smaller, and they have a big room back to this tight trading range and to the moving average. But it's still always in long on the monthly case. So still sideways to up to the month. I think we're at some targets. The question will be, in my mind, will we get to 20,000 before the end of the year? Or is that something that'll have to wait till next year? One thing that's interesting about the gap on the monthly chart is if we use this as a possible measuring gap, would give us a target up near 2650. So one of the gaps that's been in my mind is this gap, and that is from the low of the pullback to the middle of this gap here, project up to nearly exactly 20,000. And that's another reason why I think we need to get there. Can this late gap also get a measured move? Yes, I think so, but it would be more important for this larger measured move to hit first. I suspect this gap is going to get closed once we hit 20,000. If what ends up happening is a bull surprise, that means a bull breakout of a bull channel, they typically fail within 5 bars. So it might be up and sideways and then drifting back in the channel. What's the story here? You can see this big gap. We acted as resistance here for a long time. We broke above. 1, 2, 3, 4, 5, 6 times it's acted as support. So I wouldn't be surprised if we're going to come back down and spend more time around 19,000. We're still in a bull channel and traders are buying the moving average and buying below things. Here's a bear bar with enough room to the moving average. There were buyers there and buyers 1 times below that bar, betting on a test up to the new high. Now we're back up at the new high. The prior high was 691.7. The end of last week, 686.6. So they came within 5 points of closing above that high. So are we always in long? If this was a prior high and this is a swing point, we actually went below that swing point. So bears would like to argue that this is a trading range because they can take out swing points. But you can see that this high 1 buy, here's a bull spike, here's a pullback, this is a high 1 buy signal. The market has respected this. It also had buyers below it. And so that makes me believe that these traders should at least get 1-to-1, which would be 19,878. And I think that's where we need to go next week. A lot of you know that I like trading breakout pullbacks, high 1s, high 2s. Here is a high 2, pullback inside bar, pullback, and then a high 2. That target is also up near 19. So there's a couple of reasons for us to keep going. The other reason is, if you're a bear and you're scalping against, as opposed to selling so aggressively at the high, you might choose to sell a distance away from that. And that's because you want those traders to already have open profits and to be taking some of their long position off, as opposed to adding it on. This is a bull bar closing near its high. It's going to have, I think it's going to attract more buyers than sellers, or statistically in a bull channel, we can expect that. So if I'm a bear, I wouldn't be selling here. I would be selling 1R away from it. A bear who sold the close of that second entry short, either on the test back to the close, got 2R. If you sold below that bear bar, you also got 1R. And that makes me think, if we go up another range, traders will start selling up here, betting that, well, if earlier bears could make 1 or 2 to 1, hey, I can join the party too and make 1 or 2 to 1. That also happens to be where the bull's 2R target is. So that's another reason why I think we need to go there. There are two sides to every trade. One of the problems with buying here is you need to be buying a breakout, and you're basically betting that you're going to get to your target of 2,500. And if you think that we've spent a couple of months getting 800 points, it might be a stretch for you to get there up there before the end of the year. So always in long, better to be long or flat, because there's so much overlapping and tight trading range here on the weekly chart. I wouldn't be surprised if we don't quite shoot out of here. It's been a channel for so long. I think it's going to continue. I think it was a good buy at the low of this range and near the moving average, and therefore I think it's a good place for bulls to take profit up here. I'll be looking to see on Monday whether there are a lot more bulls looking to initiate new positions up there. All right, so let's take a look at the cash index on the daily chart. Well, we said we had a strong breakout signal last week, and so I had some targets slightly above. We haven't quite reached that first target, but now that we're up near the highs, I wouldn't be surprised if we go a little bit above next week and trigger it and then maybe pull back. If you remember from my last week's report, I said bears had squeezed this into breakout mode, and the highest probability outcome is sideways to up. And that's because we're above the 200 and we were above the 20 for so long. Even though the bears work hard to get into this range, they broke a price swing point. They weren't able to get consecutive bear bars. And I said this was a bit of a problem, because if someone doesn't want to sell at the low of this range, that means the only other place to sell is above the range or higher. And so there was a really good chance that these buy signals would take off. This took off last week, and then these were great opportunities to buy, and I hope you took those around the moving average. This was a breakout and follow through, expecting a second leg. This is also a breakout and follow through, so this probably needs a second leg, but it might need to pull back first. If you're buying up here, where's your stop? Somewhere down here, somewhere down here. I think with so much sideways, we're more likely to come back in as well. Well, thank you very much for watching. I hope you found that valuable. If you've got any further questions, please feel free to put them in the comments below. For those of you on the Brooks Price Action Discord, you can also reach me on there under Tim F. If you're in the Brooks Price Action trading room, you'll be able to catch me live trading tomorrow night, which is a free day. Otherwise, please tune into my channel. I'll be posting new videos through the week. Have a great trading week, and I'll see you next weekend.